As for the future, I believe there are three key areas in which self-driving technology will focus. First, there's the issue of people generally being bad drivers, which results in more than 40,000 car accident deaths per year. The second is the technological aspect. Elon Musk believes that by the end of the year, we will be able to drive ourselves completely, but that still means we are a few years away. The political component, which is the current source of pressure, is the last one. In order to elicit public action, politicians, many of whom are content creators, often construct narratives around divisive subjects, and self-driving cars are one of those. Recently, a number of analysts and stock gurus have shared their forecasts regarding the performance of Tesla's shares, which has put the firm in the spotlight. As the electric vehicle firm works to increase the value of its shares, Tesla has surpassed numerous analyst expectations, suggesting that the company has a promising future. Tesla might surpass all expectations in terms of milestones. Nonetheless, there has been a recent decline in Tesla stock, and it's possible that some investors have sold their holdings. This makes sense because the intention behind investing is to produce a profit. We'll talk about our predictions for Tesla's stock price, which we believe may reach $270 in this video. Tesla is positioned to be a game changer in the long run, even though, given its price, it may not be the best company to own in the near term or the top performer in the stock market right now. It will be completely different from anything we've ever seen. Let's get started on today's subject. In the short term and overall, the market is not a set it and forget it situation. There has been a change in the market since the July CPI report, which used data from June. You may not be performing as well as you may be if you're 401ic. Retirement account or investment account have been managed automatically and have only been dependent on technology stocks for growth. Rebalancing is key. As an example, the energy sector is now leading, with over 100% of its stocks trading above their 200-day moving average, indicating a technical buy signal. Though we've shifted our focus to energy, we still enjoy technology. Proactively choosing areas that will spearhead the subsequent market upswing is crucial as markets expand and adjust to catch up. If you remember, American fund manager and Tesla investor Ron Barron made some audacious long-term projections for the company last year. The CEO of Barron Capital Management, Barron, revealed that his company's $380 million investment in Tesla has yielded profits of almost 20 times. He claims that since investing in Tesla in 2014, when the company's stock was going for about $40 a share, Barron Capital Management has gained almost $6 billion in profits. Barron's several optimistic forecasts for Tesla's shares show how much of a fan he is of the company. Among his company's top 10 holdings is Tesla. That Barron and other stock market gurus continue to see Tesla favorably indicates that this is no typical business. Investors can choose more wisely when it comes to their assets after they comprehend this. Welcome back to Tesla Tomorrow, everyone. Investors still regard Tesla as a profitable investment for a variety of reasons. The manufacturer of EVs has steadily increased the number of vehicles it produces over the last few years. Millions of electric cars have been created by Tesla to date, surpassing accomplishments most of its rivals can only imagine. Investing in businesses that can endure severe market problems and develop at a rate significantly faster than the economy is a smart move. Based on its past performance in the market, Tesla appears to fit the bill for an EV company. It seems sense that seasoned investors are interested in funding the carmaker. For them, the long-term potential of Tesla is more important than the stock's present performance. While we examine the different explanations for why Tesla's stock will grow in the upcoming weeks, remember that volatility is still a component in investing, and that Tesla is not exempt from it. So let's get started right now, please. Before we go, though, make sure to press the subscribe, like, and post buttons if you like this kind of content so you can be informed about all things Tesla. Barron seems to have great hopes for Tesla, indicating that in addition to being a reputable EV manufacturer, the firm has the ability to rule the EV market and provide investors with large profits. He even forecasts the price of Tesla shares for the ensuing 10 years. Barron said in an interview that within the next 10 years, investors might receive a return on their investment in Tesla of 3 to 5 times. By then, he said, Tesla might very possibly surpass all other companies in the world in size. Barron has years of expertise investing, therefore his. This is how it might occur. In addition to producing and selling electric cars, Tesla has expanded into a number of other industries, such as batteries, solar products, and energy storage systems. Tesla is also making investments in AI and self-driving car technologies. In the upcoming years, the value of Tesla will be impacted by each of these endeavors. Even while Tesla, like other electric vehicle firms, has difficulties, particularly in the climate of a convoluted supply chain, the corporation is still valued highly overall. Although production difficulties and inflation are clearly big concerns for the company's finances, long-term investors don't seem to be too concerned about them. Investors that are bullish on Tesla place greater emphasis on the company's growth possibilities than on the short-term changes in the stock price, particularly when crucial fundamentals are overlooked. Competitive advantage is a key consideration for investors when selecting a firm to invest in. It entails realizing what sets a business apart and the reasons why rivals find it challenging to compete with them. This is a crucial sign of potential for the future. Though many investors are familiar with the idea of a growth firm, not all of them are aware of its competitive advantages. Tesla's culture of rapid invention gives them a competitive edge, as seen by its latest updates and unanticipated ventures. Due to its experience in manufacturing batteries and electric cars, Tesla is well positioned to accomplish notable projects in the future and maybe take the lead in the EV market. Furthermore, Tesla's full self-driving FSD capability has the potential to increase sales and customer base. Global technology progress means that more people will probably choose solutions that make daily tasks easier, and Tesla's FSD feature makes driving safer and less stressful. For owners of electric vehicles, this is and will remain a top priority. These kinds of factors will play a major role in the future expansion of Tesla's electric automobiles. If all goes according to plan, Tesla will be able to reach its financial targets and raise the price of its stock. How do you feel? Tell us in the comments section below. Click on the next video that appears on your screen to find out more about Tesla. I'll see you there. As for the future, I believe there are 3 key areas in which self-driving technology will focus. First, there's the issue of people generally being bad drivers, which results in more than 40,000 car accident deaths per year. The second is the technological aspect. Elon Musk believes that by the end of the year, we will be able to drive ourselves completely, but that still means we are a few years away. The political component, which is the current source of pressure, is the last one. In order to elicit public action, politicians, many of whom are content creators, often